Aloha folks, thank you so much for checking out this video. In this video we are going to talk about 3 recession-proof dividend stocks. So if you're interested in these kinds of stocks, definitely check this video out. If you are new to the channel, I just want to say aloha. In this channel we look at dividend companies to invest on. So if that's something you're interested, definitely hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on these great companies that we look on and we invest on. With that said, let's take a look at these 3 companies that are also undervalued. So first on the list is Coca Cola. The ticker symbol is KO. I don't think you need an introduction for this. It engages in the sale of non-alcoholic beverages. So you can see on the website they have that. There's a limited edition Starlight. So I wonder how that tastes like. But so Coca Cola is one of those staples. Definitely a well-known company. Definitely if you're looking for a solid, great company to invest on, definitely check this company out. Now if we go to Simply Safe Dividend, based on their dividend safety score, they're rated as safe, which is about 80. The dividend yield is 2.95. Market cap is about 258 billion. Now if we go over to some of the key metrics, you can see payout ratio is about 72, which is high for consumer staples. During the recession, they have increased their dividend from 07-09. Now if we look at the dividend growth, the last 5 years it's been pretty slow, only 4%. But the last 20 years is about 8%, which is fast. Now if we look at the chart, you can see upward trend. It's a little bit stagnant here, but it still continues to go up. Uninterrupted dividend streak of 59 years without a reduction. I think by the end of this year it'll hit 60, and that's a pretty good accomplishment in my opinion. Solid, great dividend company. 59 years of increases. Now your payment details, you're gonna get paid quarterly in the months of April, July, October, and December, and your annual payout would be $1.76 per share. Ex-dividend date has passed March 14. Then you get your payout of April 1st. Now if we look down to some of the PE ratio, you can see 24, whereas consumer is 20%. 52-week range, the high is 62, so it's getting up to the high. Now if we go over to some of the free cash flow, you can see about 64%. Earning payout ratio is about 72. Earnings per share is about 2.45. Free cash flow per share is about 2.61. Looking down to some of the return on investment capital, ROI, 16%, which is above the 12%, and you got your return on equity, which is 42%. Now if we swing to tip ranks, their rating is moderate buy. There's about 11 buy, 4 holds, and 0 sell. Price target is to the 67, 13% upside. Their price target is in the high of 76, and the average of 67, and then the low of 60. Now if we go down to some of the detailed analysis, you can see majority of them is a mixture between a buy and a hold, but I think for me, in my opinion, Coca-Cola is definitely a buy for me. Now if we swing by to CNN Business, based on the shareholders, you can see the latest activity. You can see right here, BlackRock, and then this one, and then T. Rowe Price. Now if you swing by, you can see BlackRock bought about 10 million shares. Then you got your other ones that bought a couple more, and then you got some selling ones right here. But most of the time, you can see they're buying in millions. Yeah. Now if we swing to Simply Wall Street, based on their share price and fair value, they rated this as on 15% undervalued. Their fair value is somewhere in the 70. At the time of this video, it's about 59, so there's a 15% undervalued. Now, if we swing to the company overview, solid track record with adequate balance sheet and pays a dividend. Some of the risk is high level of debt and all that stuff, but for me, Coca Cola is just one of those solid companies. Now, if we swing over the bar chart, you can see high price target is 76, the mean is 66, and the low of 60. With the current average of moderate buy based on 11 analysis, you can see 3 months has been pretty similar, moderate buy. Now, looking at the breakdown, you can see 4 holds, 7 strong buy. Now, swing by to Robinhood. You can see for today, it was only up 2%. For the week, it's down almost 3%. For the month, it's down almost 3%. For the 3 months, it's up 2%. For the year, it's up 16%. 5 years, it's up 41%. So I do have a hold on this company. Currently, I have 102 shares. Average cost is about $53.96. I do plan on increasing my shares. I want to try to get it into 1,000 shares, but slowly, nibble here, buy one here, buy another one here and there. I'm not rushing into buying this one. I always try to get the dollar cost average down. So if it goes down to lower than 53, then I'll definitely buy 1 or 2 shares. I really love the dividend. So you can see from here, I'm getting about $44 just by holding this one. So definitely love these dividends coming over. So next on the list is Kimberly-Clark. The ticker symbol is KMB. This is a company that engages in personal care products such as baby wipes, diapers, and you got your Kleenex. So more likely or not, if you go around in your house, you can see you probably buy all of these. And if you have kids, definitely use some of these diapers and wipes and toilet tissue. So definitely a solid company in my opinion. Now, if we go to Simply Safe Dividend, based on their dividend safety score, they rated as 88, which is very safe. The dividend yield is about 3.83. Market cap is about 40 billion, which is a large cap. Now, swinging by to the key metrics, you can see payout ratio is about 74, which is also high. During the recession, they have increased their dividend. Look at the dividend growth. The last 20 years, 7%, which is average. Last 5 years is only 4%, which is slow. Pretty similar to Coca Cola. You can see it's an upward trend. Again, uninterrupted dividend streak. 49 years without a reduction. Consecutive increases of 49 years. So again, another solid, great company to invest on. Payout details, you can see quarterly, you get January, April, July, and October. Annual payout is about $4.64. Ex-dividend date is March 3, and then you get your payout, which is April 1st. Looking down to some of the price 52-week range, you can see it's a little bit on the low side. The high is about 144. PE in the sector is pretty it's the same, 20%. Now, if we look at some of the stats in here, I always like the return on invested capital. You can see 27%. Return on equity, it's about there, yeah. And then you got your earning per share growth, free cash flow, and then you got your free cash flow ratio, earnings payout ratio. Now let's look at tip ranks. At the time of this video is a 121. Their rating is a hold. There's about 1 buy, 8 holds, and 4 sell. Price target on this one is 133 with a 9% upside. The high would be about 156, and then you got 133 and then 118. Now, if we look at the analysis forecast, you can see mixture mostly of holds and sells, some buys, but mostly holds. Yeah. Now if we swing to CNN Business, based on their forecast, a high of 156, a medium of 130, and a low of 118. Their rating analysis recommendations is pretty much the same: 14 holds, 2 sells, 2 underperform. Now looking at bar chart, based on their price target, you can see 156, 132, and 113, and their rating is also a hold, so it's been a hold for the past 3 months. 11 analysis rating it as a hold. You can see 3 strong sell, 1 strong buy, 7 holds. Now let's take a look at Simply Wall Street, based on their valuation, share price versus fair value. Check this out. Wow, 50% undervalued. Their fair value is about 246. At the time of this video is at 121. So based on their share price and fair value analysis, this is a 50% undervalued. So now if we swing to Robinhood, for today it was only up 1%. For the week it was down 4%. For the month it's down 8%. For 3 months it's up 12%, down 12%. Past year is down almost 10%, and then for 5 years it's down almost 9%. So I do not hold a share position in my Robinhood portfolio, but I do have it in other portfolios. So this, for me, this is a solid company to invest on. If we swing by some of the Robinhood analysis, again, it's pretty much similar to the rest. It's a hold. You got 5% buy, 68% hold. Yeah. If you look down some of the fair value is about 119. So at the time of this video, it's about 121. So definitely something to invest on. If you're looking for something, a company, this is one of the ones I would, I would like to. Eventually, I think I would slowly get into the investing in this one in my Robinhood portfolio, but at this time, I think I'll wait. I want to get some of the other positions higher. And then the last on the list, Procter and Gamble. Ticker symbol is PG. This one engages in beauty, grooming, healthcare products. So again, if you use Tide and all those other companies, Tide and all those products, so definitely for me, I like using this product. It's a great company. Again, I think one of the things I know is a lot of people probably use this, like Oral-B, Bounty, Tide, Gain. And so now if we swing to Simply Safe Dividend, based on their dividend safety score, they rate it as 99, which is very safe. Dividend yield is 2.32. Market cap is 360 billion. Now looking down to the key metrics, you can see 60% is the payout ratio, which is low. Recession dividend increased during the 07-09. Dividend growth, last 20 years 8%, last 5 years 4%. Now look at the dividend growth streak, 65 years. Now you got your uninterrupted dividend streak of 65 years without a reduction. Pretty awesome, in my opinion. Quarterly, you get paid February, May, August, and November. Annual payout is $3.48 per share. Going down further to some of the financials, you can see return on investment capital 21%. So return on equity 31%. So now swing by to CNN Business, based on their forecast. 187 is the high, 175 is the medium, and you get your 145 is the low. Now if you swing to the analysis, you got 10 buy, 10 hold, so it's kind of like a mixture. Now checking out bar chart, you can see the target is 187. the mean is 169, and then you got your target of 138. And then they have the analysis of moderate buy based on 11 analysis. If you look at the breakdown, 5 holds, 5 strong buy, 1 moderate buy. Now, take a looking at Simply Wall Street based on share price and fair value. They rate it as 30% undervalued. Their fair value is about 227. Currently, at the time of this video, is about 150. So, another undervalued company to possibly invest on. Now, if we go swinging to Robinhood, for the week, it's only down 1%. For the month, it's up. It's down 4%. For the past 3 months, down 5%. For the year, it's up 16%. And then for the past 5 years, is up 65%. So another great company to invest on. Again, I don't have position in my Robinhood portfolio, but I do have in other portfolios. But this is a great company to invest on, in my opinion. All of these companies are great on. Definitely, if you haven't done so, definitely check out check out my other videos as well. As always, please remember, this is not financial advice. Stay cool, guys. Be safe out there. Stay cool. Keep investing, and I'll catch you guys in the next video. All right? Take care. Aloha.